and welcome to the second quarter earnings call for FY25. We continue to see strong performance in our branded businesses, which accounted for 74% of the overall revenues this quarter. India business grew by 13% this quarter. Brazil grew by 17% in constant currency terms. And in terms of INR, it was 4% due to the currency depreciation. Germany grew at 8% in the quarter, and we continue to win additional tenders quarter on quarter. US grew by 8% and was flat on rolling quarter basis. This quarter, insulin revenues were impacted due to the shutdown taken in the month of August for maintenance activities. The facility will be released for manufacturing in December. Shortfall is planned to be significantly recovered in quarter 4 of this year, and consequently, there will not be any impact on a full year basis. Broad financial highlights for the quarter. Revenues were at 2,889 crores, up by 9%, and operating EBITDA at 939 crores, up by 14%. The operating EBITDA margins for the quarter stood at 32.5%. This margin accounts for the cost of 300 reps, which we have added so far this year. Adjusted for insulin revenue impact this quarter, the underlying revenue growth is 10% and operating EBITDA growth is 16%. Other income includes forex loss. Net debt to EBITDA stands less than 0.5x as at end of quarter 2. I now hand over the call to Aman for India business.
Thanks, Sudhir. India revenue at 1632 crores registered a growth of 13%. As per the AIOCD secondary market data, the IPM growth for the quarter stands at 8%. Torrent's chronic business grew at 14% versus the IPM growth of 9%, driven by continued traction in our cardiac divisions and OAD new launches. The cardiac business, which is our largest contributor, has grown by 15% during the quarter versus a market growth of 12% due to the restructuring that was undertaken last year along with divisional expansion. We continue to see positive traction in our consumer health business. We have expanded our coverage to 72,000 outlets from 68,000 outlets in Q1. Our key brands, Shelcal 500 and Tedibar in particular, continue to benefit from focused marketing campaigns across various channels, national and regional. On a MAT basis, Torrent has 21 brands in the top 500 of the IPM, with 13 brands more than 100 crore sales as of MAT March 2024. Field force strength at the end of the quarter stands at 6,000 compared to 5,700 in the previous quarter. We are encouraged by the performance in the recently expanded divisions and headquarters. This expansion is not only helping us gain regional market share in previously untapped areas, but will also provide a platform for new launches in the near future. We expect the India business to continue outperforming the market growth. Our focus during the year will be on continuing to improve our market share in focused chronic therapies, new launches, improving field force productivity in the expanded divisions and regions, and continuing the scale-up of the consumer health business. I'll now hand over to Mr. Sanjay Gupta for the international business.
Thanks, Aman. We'll start with the branded generic business of Brazil. Q2 constant currency revenue was at 174 million Brazilian reais, registering a 17% year-on-year growth. As per IQVIA, market growth was at 8% for Q2. Secondary sales for Torrent as per IQVIA also grew at 8%. During Q2, we launched dexamphetamine for ADHD. It's a 800 million Brazilian reais market, and we are one of the 2 branded generic players. Our goal is to make this into a large brand, which in Brazil would mean annual sales above 75 million Brazilian reais. We have a rich pipeline of 21 molecules filed and waiting on ANVISA approval. In Germany, our German business registered a constant currency revenue of 31 million euros, up by 6%. During the quarter, we once again won incremental new tenders, which will start delivering incremental sales from Q1 of 25-26. For the last 6 quarters, we have increased our overall value of wins in tenders. Moving on to the US, we have registered constant currency revenues of USD 32 million, up by 7%. Sequentially, US business has delivered stable revenues. During the quarter, the US FDA has issued an EIR with a VAI classification for the manufacturing facility at Indrad, and the inspection has now been successfully closed by the US FDA. The FDA also inspected our manufacturing facility at Pithampur and issued a Form 8483 with one observation. Torrent will respond to the FDA observation within the prescribed time frame. I would like to conclude the comments here and open the call up for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, am I audible?
You are audible, sir. You may proceed.
Thanks for the opportunity. Sir, just on the insulin front, this issue is more of a temporary thing, and you think that this will get resolved soon, or it might take longer?
No, so I think the plan is to release the manufacturing in the month of December. And then what we've said is quarter 4, whatever shortfall has happened for the 4 months would be recovered. So it's a temporary disruption, and therefore on a full year basis we should recover the revenue. Understood.
And sir, if you could throw some light, let's say in terms of this GLP-1 set of products as far as India markets, how are we preparing, let's say, to launch in the India market as and when sort of the regulatory approvals comes through? Will the manufacturing per se will be a constraint in terms of having this product available?
So we are evaluating all options. Early days right now, but we are certainly working on possibilities whenever the launch is possible.
But just as a clarification, unlike say other products as far as domestic formulation market is concerned, outsourcing is not that difficult. But do you think that these products, particularly liraglutide, semaglutide, will have the manufacturing constraint?
We are not manufacturing or planning to manufacture any GLP-1 at the moment, if that's what you're referring to. This is a CMO business that the old business that we've had with Novo Nordisk for insulin, human insulin.
Got it, sir. Got it. No, I meant to say as and when we launch, will not having a manufacturing facility or maybe outsourcing, will that be a constraint even if the demand is there? So that was the thought process.
No, don't think so. But again, early days, we don't have any specific updates as of now.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question comes from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. My first question is on gross margin. So we continue to see, I guess, positive surprise on gross margin. So if you can comment, what is leading to consistent improvement in gross margins, and what kind of further levers are available from here on, and where do you see this margin settling in?
So, Damayanti, if you look at last year, full year, the gross margins were maintained at 75. And quarter 1 of this year, we were a little higher, 75.7%. And this quarter is even higher. And that's because the branded mix in the overall revenue base is higher compared to last year as well as quarter 1. And that has pushed up the gross margins for quarter 2. So it's basically a function, I would say, of the branded mix in the overall revenue base. But looking to the last year's base of 75 and quarter 1 base of 75.7, I think that should hold.
So you think current level can be sustained or can be further improved?
Yeah, as of now it looks so. Because the branded mix will not be changing substantially, I would say, at least for the next quarter.
Okay. My second question is on your efforts or initiatives towards the consumer health business. So if you can share like what kind of incremental initiatives are ongoing and what kind of spend you are incurring to really step up the consumer business in India.
So spends are two-pronged. One is on the ground through the retail activation and our field force. We keep increasing the number of covered retailers across the country. That helps drive greater coverage and visibility. And second is on the advertising, which is both traditional media and digital. Depending on the quarter and seasonality and offtake, the spends keep varying from quarter to quarter, but we can indicate that our spends this year so far have been higher than last year, because we do see that the consistency of the advertising is helping further sales traction, especially in Shelcal 500 and Tedivar.
Okay, so very broadly, what percentage of sales is currently going towards the A&P for consumer business?
So it's difficult to segregate and tell you the revenue numbers because these products are already there on the prescription platform. So we know what we are spending. The only thing what we monitor is that wherever we are doing these programs, what has been the growth, historical growth in these pockets versus the pockets where we are not doing these programs, and we see a good positive outcome happening because of CHC programs which are carried on.
Okay. My last question is on the US business. So I guess we continue to see a very gradual step up there, despite now all the key plants being cleared by the US FDA. So how do you see US sales moving up from here on? And if you can also update in terms of the launches which you are planning for next 2 years or so.
So US, we don't expect a ramp up in the short term because most of our filed ANDAs are let's say very old, right? Because of the lapse of time since the plants got into trouble. We expect a low single-digit approval of newer ANDAs, and it would largely compensate for the price erosions and things of that sort. So I don't expect the US to ramp up anywhere very fast in the next 2 years. So it'll be a slow ramp up unless we get lucky with one or the other opportunity. So we do have a few which might be a unique product, but we cannot predict because it depends upon the number of competitors that show up and if we get CGT or not. So I would generally guide towards stable to slightly increasing revenues, but nothing more than that.
Okay, sure. Thank you.
Thank you. Participants who wish to ask questions may please press star and 1. Ladies and gentlemen, that is star and 1 if you wish to join the question queue. We have the next question from the line of Amay Chalke from JM Financial. Please go ahead.
Yeah, thank you for taking my question. Our first question on the India business. So in India business, we have been growing well for the last few years. We have gained market share in value, which we see the data provided by an AIOCD. However, is it possible for us to give some clarity on the prescription market share again in our top 10 to 15 products over the last 1 or 2 years? How has been the trend there in some of our key products?
The prescription share has also gained. I don't remember the exact numbers offhand, but most of our focused brands in our chronic divisions and subchronic divisions have gained higher market share compared to the relative market, the covered market. So obviously the prescription growth has to be followed by the market share growth, otherwise it's not possible.
Got it. And the second question I have, is it possible to provide the margin drivers for next 3 years? So far we have reached around 32% plus now. So going ahead, what will be the key drivers from here? Is there any geography where you think if the ramp up happens, the margins could improve, or anything, any margin drivers you could highlight, please?
No, so I think Amay, 2-3 things, right? So I think as far as branded businesses are concerned, some amount of reinvestment keeps on happening every year, and that's something which I said in the opening call, where the quarter 2 P&L has already absorbed the full cost of 300 medical reps, which we have added this year, right? So to that extent, the reinvestment from margins will keep on happening. But in spite of that, I think the general guidance which I have been giving is that we should see anywhere between a 50 basis point to 100 basis point improvement happening every year. At least the way I look at for the next 3 years, as of today, I don't see some major investments happening in the branded business. As far as Germany is concerned, Germany is good, I would say, in terms of winning tenders, and there's good amount of visibility for the next 2 years. So I don't see any additional incremental spend happening in Germany as well. US, as Sanjay talked about, right? I mean, it's a slow ramp-up which would happen over the next 2-3 years, which is only going to be positive on the overall performance of the company. So nothing negative from there as well.
So the way I understand it, the investment pace is coming down, so that's why the operating leverage will play out, and that's how the 50 to 100 bips margin improvement will happen.
So there are two inherent levers which we've always talked about. So one is branded businesses price increases, which we take every year. That's one lever. And the second is the operating leverage, which plays out every year for us.
Okay. And the third question I have is on the R&D spend. We have been doing 5% of our R&D, 5% of our top line on the R&D. Is it possible to give clarity on in what areas we have been spending? Because this has been quite consistent even during the time when we had issues with the US.
Correct. When we had issues with the US, what we did is we actually diverted a decent piece of the R&D budget towards the markets of Brazil, Mexico, and Germany. So we maintained the R&D spend, and we cut down the part of the R&D devoted towards the US. So hence, we don't intend, at least as of today, to substantially change the ratio of R&D to sales.
Yeah, Amay, 2-3 things actually. So in terms of absolute value, if you see, the R&D spend has been going up.
Yeah.
On the other hand, the branded businesses share has been going up, right? I mean, for example, Curatio acquisition, which we did in 2022, increases the revenue base, and therefore, as percentage to revenue, it's around 5%. Okay.
Right.
But if you look at an absolute value, it's been going up. Okay.
Right.
The only thing which is why it is not going up on relative basis is that the spend on the US we had lowered, right, and because of the internal issues which we've had. So I don't see substantial increase in R&D at least over the next 1 year. But if everything is starting to go right for US, we'll see how to incrementally allocate R&D for US.
Sure. And in terms of formulation, what all types of products are we putting this spend on, like in terms of injectables or anything else which we are trying at this point?
I think most of the R&D spend which is done in-house is on oral solids. The other types of platforms are partnered.
Inside oral solids are oncology, dermatology, and classical oral solids.
Sure. Thank you so much. I will join back.
Thank you. The next question is from the line of Bino Patiparampil from Elara Capital. Please go ahead.
Hi. Good evening. Could you please explain this insulin issue in a bit detail? What exactly happened and how it will get?
Yeah, so as I said, right, I mean, there's a shutdown taken for some upgradation and maintenance activities. This was something which was scheduled earlier, right? And what we said is it's getting released in December, and we should recover the shortfall in quarter 4, most of it.
Okay. So it was just a shutdown for a plant upgrade. That's it.
Oh, yeah. Upgrade and maintenance activities, right? I mean, it happens once in 2 years or 3 years.
Got it. Thank you.
Thank you. The next question is from the line of Sumit Gupta from Centrum. Please go ahead.
Hi, good evening. Thank you for the opportunity. Sir, I have three questions. First on the India side. So now that 300 MRs are added, so what's the plan ahead? Do you plan to add more towards it? And what kind of MR productivity can we see over the next 2 to 3 years?
So 300 have been added this quarter compared to 5,700 previous quarter, which is what we had also shared last time. I think given how we are encouraged by the performance, we will be looking to add incrementally from here. So maybe 100, 200 more end of this financial year and potentially a similar number next year.
Okay. And the kind of MR productivity that we can target is?
More or less should touch, anyway, currently it's around 9 lakhs, if I'm not wrong, between 8.5 to 9 lakhs. Within the next 18 months, possibly should be between 9.5 to 10 lakhs. It's a broad range.
Okay. And so second question on the US sales. So, what is the profitability? Is the US business profitable post R&D?
So we don't disclose profitability by territory. What we've said is that the US is at a break even pre-R&D.
Right. Okay. So, post R&D, by when can we expect the profitability to break even?
So the expectation is at least over the next 3 years, we want to make it a profitable business.
Understood. And the last question is on the CAPEX. So how much of CAPEX we plan to incur over the next 2 to 3 years?
Around 250 to 300 per annum.
Okay. Cool. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 if you wish to ask a question. The next question comes from the line of Sayon Mukherjee from Nomura. Please go ahead.
Hi, thanks. Just one question. This insulin, can you share what's the revenue on an annual basis? And is it fair to assume there was no revenue this quarter?
Yeah, so ideally per quarter revenue ranges between 75 to 80 crores. And this quarter there is a shortfall of almost 40 crores.
Okay. And just one last question on Brazil. You had good growth, but if I look at the first half, I think the growth is around 12%. Is that the right thing to look at? Because I understand there was some disruption in Q1 and, there was spillover of sales, etc. So just want to understand the underlying trajectory because you mentioned IQVIA is indicating a 8% growth.
Correct. I would say that it's somewhere between 8 and 12, but closer to 12.
Okay. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. To ask a question, ladies and gentlemen, you may press star and 1 on your touchtone telephones. The next question is from the line of Alok Dalal from Jefferies India Private Limited. Please go ahead.
Yes, good evening. Aman, can you provide split of volume, price and new products for India?
Yeah, so as per the AIOCD data set, our growth for the quarter is 12%. Breakup of that is 1% of volume versus 0.2% of the market, 8% price versus 5.5% of the market, and 3% new products versus 2.4% of the market.
Okay, thank you. And Sanjay bhai, what will be the guidance for Brazil for the full year? You expect growth to remain in this range only?
Correct. So I would start with a double-digit top-line growth. In Brazil, traditionally, historically, the second half is a little better in the invoice sales. Just the way the wholesalers work, it's not. So yeah, I think the market should continue to be 8-9%, and we should be higher than the market growth rate.
Okay. And what is the plan for new launches in Brazil?
We have an aggressive plan. So we have 3 teams in Brazil, 2 CNS teams and 1 CND team. And then on top of it, we have a generics division. So ideally, we like to launch at least 1 to 2 products a year for each division. And for generics, about at least 5 products a year, 5 to 10.
All right. Okay. Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 if you wish to ask questions. We have the next question from the line of Damayanti Kirai from HSBC. Please go ahead.
Hi. Thank you for the opportunity again. Coming back on India, so I guess we continue to see very muted contribution from the volume expansion, low single digit. So what is the outlook here? Should we assume going ahead also volume contribution will remain muted in low single digit and majority will be contributed by price and new launches? How do you see like volume moving up in the market, the broader market?
So compared to the AIOCD data, our reported growth is higher by, I think, about 1%. So that we attribute to volume. And we have to look at it from a combination of volume and new products growth, because in our case, it's some of our mature products which are now being, the share is now shifting to the newer products. So once the new product growth normalizes into volume growth, it should all be volume. So if we look at right now, the breakup is about 4% between new products and volume. So our estimate is somewhere around 3% is what the volume growth should be, and that should continue.
Okay, understood. But what are your thoughts, like in the India market? Obviously, we are seeing this low contribution overall for last couple of quarters. So what is attributing mainly for this kind of muted, I guess, contribution from the volume?
So we still believe that the market growth cannot be as low as 8% and volume growth cannot be this low, because we simply cannot grow volumes at that rate as we are reporting if the market growth was that slow. So our estimate of the market growth is higher than what's in the data sets by at least maybe 2%.
Okay. Thank you. All the best.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Rahul Jeewani from IIFL Securities. Please go ahead.
Yeah. Hi, sir. Thanks for taking my question. Can you quantify the quantum of forex losses which is sitting in other income for this quarter?
Yeah, it's around 22 crores, Rahul.
Oh, sure, sir. And, sir, on the debt position, at least if I see the 1H numbers, our net debt is largely flat versus FY24. So what kind of repayment have we seen in 1H?
So, if I correctly remember, Rahul, the gross debt was roughly 3,900 crores as at March 24, which has come down to 3,000. So the gross debt is 3,000. On a net debt basis, it's become 1,800. So we've repaid actually 900 crores in H1.
Okay. Yeah, that's it from me. So thank you.
Thank you. Ladies and gentlemen, you may press star and 1 if you wish to ask a question. We have the next question from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. Just to follow up on gross debt, 900 crores we have repaid in H1. Any more quantum repayment expected in H2?
Oh, yeah. So I think we should be repaying around 500 to 600 at least.
Okay. And what about FY26, similar annual number?
Yeah, I think FY26 we should be net cash.
Okay. And just one on US business, with the Indras also now coming out and receiving the EIR, how many new launches are planned, at the company level from the facilities as well as your partner products put together?
This would be single-digit number of launches. So it's,
single-digit. And this would be high single-digit launches?
I actually cannot say because we've got the EIR, but it takes several months post the EIR for the FDA to approve the product. So we have, we think, at least mid-single digit should get approved in a 12-month period post the EIR.
Understood. And but otherwise, this base sales of $32 million quarterly run rate, it would be maintained in the subsequent quarters also.
Yeah, our endeavor is to maintain and to enhance those new products.
Okay, got it, sir. Thank you. That's it from my side.
Thank you. We have the next question from the line of Anubhav Agarwal from UBS. Please go ahead.
Hi guys, just checking, am I audible properly?
You are audible, sir. You may proceed.
Cool. Thank you. Just one question from me on the India business. So the expansion of field force by, let's say, high single-digit percentage on an annual level, what is the primary dominant factor there? For example, are you increasing your doctor coverage here predominantly, or this is largely for the new launches in the same divisions, or you're increasing more divisions?
It's a combination of all three. More divisions, more coverage, more territorial reach, all three together. And we have seen pretty good results in the expansion done in the last 18 months as a result. So wherever we see whichever divisions or brands are yielding results within a certain period of time, we decide to take further expansion actions if required as well.
But on the first point on the doctor coverage, do you think that there is a potential to cover significant more number of doctors that you're covering right now, and therefore this field force for you instead of, is there a merit, first of all, instead of growing the field force by 7-8% versus growing at 12-13% or thereabouts, for example, and covering more doctors and you're taking more market share from the smaller companies?
Yeah, because we are just not adequately present in some non-metro towns where we believe that there is justifiable reason for us to enter.
Aman, can you give us an example, just to understand a little better? For example, when you say non-metro towns, for example, I'm in Mumbai, so just take an example, Nashik, for example. Would you quote Nashik as one of that example?
If I look at Ahmedabad, for example, then nearby towns would have been covered from Ahmedabad historically, and that kind of compromises your frequency of coverage and total kind of extent of coverage. But if you have a full base in a nearby town which now has adequate population, population was never a concern, adequate doctor presence, that's where you can increase, and it justifies the need for your presence full-time in that region or headquarter. And that is where we are seeing that addition is really helping some of the chronic divisions, the sub-chronic divisions, particularly in gastro, where we are seeing a significant uptake.
Okay, sure. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. We have no further questions at this point, ladies and gentlemen. I would now like to hand the conference over to Mr. Sanjay Gupta, Executive Director of International Business, for closing comments. Over to you, sir.
Thank you. We'd like to thank you for your participation today. We continue to remain focused to grow the company in our branded generics market and to remediate and start growth in the US market as soon as possible. And thank you.